Looking for ways to run the most successful global single-family office? Discover the best practices and industry secrets that will enable your SFO to become innovative, resilient, and successful through the Angelo Robles podcast with your host, Angelo Robles.
Welcome, everyone. It's Angelo Robles to the Angelo Robles podcast. I'm also the founder and CEO at Family Office Association. Today, our session is Plan B at 100 trillion USD on Twitter. I've never quite had a title like that before, or with someone who's not using their quote unquote, their real name, or even their image if you're watching this on video. And if you're into Bitcoin and crypto and digital in general and have not heard of Plan B, like you must have been in a cave, I'm really excited to have him on. Plan B, welcome to the show.
Thanks for having me, Angelo. I'm excited for this chat.
Well, thank you. I'm excited about it as well. So what really put you on the map, and that's probably putting it very lightly, it's been amazing, is what you've done with what's known as your stock to flow model for mapping out, let's call it Bitcoin's trajectory. If you could talk actually in detail about what makes up your stock to flow model, our audience would love to hear that. Then we'll dive into much more questions from there.
Sure. So my background is in institutional investing. I managed, and I have to say managed because it's in the past, up till last month, a big sum of institutional money. It was $100 billion together with 10 other people. And one of the first things that you need as an institutional investor is a model for valuation if you invest in an asset. So I was missing that in Bitcoin and started to work on it. And the main eureka moment, if you will, for me was, why do people invest in Bitcoin? Now, why did I invest in Bitcoin? It has to do with the scarcity. It has to do with the 21 million coins and the supply cap that cannot be changed in the software. It would be like changing the rules of chess. You can do it, but you would play alone. And the 21 million, the scarcity, that is really the key thing for me to invest in Bitcoin. For a lot of others also, I noticed. So for me, that was the starting point for looking for building this model. So the whole stock to flow model is built on scarcity. Now, how do you measure scarcity? And I knew from commodities investing, gold, silver, etc., and also from Safedin's book, where he applied it to Bitcoin, that you can measure scarcity with a stock to flow measure. It's a ratio between how much reserves are there of Bitcoin or gold above ground, divided by the yearly production of that asset. And for gold, for example, that's about 60. So there's about 60 years of gold production above ground. For Bitcoin, it's now around 55, so very close to gold. And you can do that for, a lot of other assets. You can do it for real estate, it's 100. You can do it for silver, it's 30, et cetera, et cetera. What I did in the model was just take the historical path of stock to flow values of the last 10 years together with the Bitcoin price or market cap values for the last 10 years. And I did a regression on them. Mm-hmm. And I should say, to be very specific, I did the logarithmic of the price or the market cap and the logarithmic of the stock to flow. So in technical terms, what we're modeling here is the change in stock to flow is proportional to the change in value or market cap. And that's indeed what we found. We found a very beautiful linear relationship between the log stock to flow and the log price with a very high R squared. And so the first version of that model was a pure time series model. So the Bitcoin prices and stock to flow only. The later version, the stock to flow cross asset model, also had gold, silver, real estate, and diamond, the total market cap and the stock to flow in there. So the regression analysis was done not only on Bitcoin, but also on those 4 other assets. So this model got quite some traction on Twitter as well. It was made in March 2019 when the price of Bitcoin was below $4,000.
That's right.
And it has got some critics as well, a lot of fans, some critics, and there's been a lot of discussion. I like it. I like the discussion. I like the scientific debate, if you will, around those models, because it's a first attempt, and I'm sure there can be much improvements on this model.
I mean, that's really detailed. I've dived into a little bit of some of the things that you're noting from the logarithms and all that. And I think really ingenious in terms of what you have done, and obviously has played out well relative to some of your, let's use the word, what the charting is showing in terms of predictions. If anything, has maybe been a little too tame. So it really has kind of taken off, and kudos to you. I find it to be very, very valuable. A question I would have for you: what would cause you to change your opinion? I'm assuming some of the obvious is some of the data points may cause the formula to change. But I think what I'm really getting to is if the US government stops printing money and goes to a gold or Bitcoin standard, well, that could change things too.
Yeah, great question. Well, the one thing that would really make me doubt is if the performance of the model would go away, if it would fail. So last 2 years, it performed perfectly, like really almost scarily good. And yeah, if that goes away, so if we go, for example, way down from here, way below the, say, 100,000 that I predict, or 288,000 that I predict with the stock to flow cross asset model, that would really make me doubt. And likewise, if we go much higher than the model as well, and there's lots of talk about that, of course, on Twitter and in the community, the super cycle theory, that there will not be an all-time high and a crash after that anymore, that we're done with the business cycle and go only up from here. That would also crash my model to the upside. But yeah, apart from that, there is, of course, a lot of statistical and econometrical debate about the models. Is it a spurious regression? Is it a spurious correlation? Can we apply co-integration? What about the serial correlated errors, which is always a problem? So there's all kinds of statistical questions and issues you could raise in the model. But for me, the most important thing is that it's out of sample performance on new data starting from March 2019 was outstanding. And as long as that keeps tracking, I'll be more than happy with the model.
You know, you brought it up and you were very gracious to some of the detractors. And in anything that any of us do, we're always going to have them. But what do you say about those that have challenged the model, your stock to flow, probably the most prominent being Nick Cordiero? And again, it's always good to listen to the other side. Sometimes they bring up good points, but you have been very accurate so far. But it sounds like you're still listening to the other side, which to me shows that you have a beginner's mindset, that you're open-minded, and maybe some things do need to be tweaked in the future. But for now, you've been eerily accurate.
Yeah, I guess as an investor, especially as an experienced institutional investor, you have to be humbled by the market in your experience, because predicting markets, especially in the future, is very, very hard. And well, one of the best critics I got on the model, and I wrote an article about that as well, is of course, the efficient market hypothesis. It should not be possible to predict the market and to earn money this easily. And yeah, everybody can be rich following that model. So what do we not see? So that is a very fair question. And so why should it work in an efficient market context? And what are the risks that we're not seeing? I'm always very open to critics, also on my other models, on my non-Bitcoin, non-stock to flow models for my other investments, because this is science, it's debate. When there's no more debate or discussion possible, then the science stops and it becomes a religion. And to be honest, I have skin in the game too. So I am invested in Bitcoin. If the model is wrong, I want to be the first to know and to act on it.
For sure. And I know you give your predictions, and I might add with a pretty wide range. We're going to get to a more specific question on that relatively shortly. But there's many people that are going to say that we're going to see a price of Bitcoin inevitably at 400,000 a coin, at $1 million a coin, maybe after the next halving. And I believe I heard Michael Saylor, when I kind of went backwards in some of the things he was noting, $5 million a coin and even greater. Your models haven't gone to that level yet, but have they reached out far enough? Do you think we'll inevitably reach those incredibly, what appears to be high levels, and not 80 years from now?
Yeah. Number go up, they say, right? So Bitcoin always goes up, and we don't need models because, well, it goes up. But I think what my model adds is when it goes up. The stock to flow is heavily based on the halvings in Bitcoin. So every 4 years, there is a halving of the supply, the annual supply of Bitcoin.
Right.
So we just had that in 2020. We had one in 2016 and one in 2012. So every 4 years, there's a halving. And my model indicates that it's the year after the halving that this big rise in price it is seen. And that will, timing-wise, and for investors, and also to understand why Bitcoin is increasing in price, that's very important to me. So then on a big picture level, the high numbers that everybody is mentioning, like the couple of million numbers, we get to that in the next cycle. So my models expect $288,000 this cycle. So 2020, 2024.
Right. So still about 3 more years left. But you're thinking by the next cycle, which again is a couple of years away, that's when we could start to see the exponential growth in terms of possibly $1 million or more per coin. And again, nothing's guaranteed. So my audience, please be careful. But again, what you've done has been eerily accurate. And I think relative to what we've seen in the halvings, that appears to be, hopefully something that will turn out to be true. I'm going to ask you a question I don't think you've been asked yet. It's going to put you a little bit on the spot, but I think the audience would greatly appreciate it. What is your stock to flow model showing some possible prices of Bitcoin each month of this year? I don't know if you know it off the top of your head or you're in front of a computer, but if I had to pick a date, let's say starting in May on the 15th of the month, do you have anything that would show what you believe the price is going to be on May 15th, on June 15th, et cetera, through the end of the year?
No, I wouldn't have that because the model is, like you said before, it's very rough and not very accurate to the date. So it gives a level for the halving period. So that would be the 2020, 2024 period in this case. And then, you can deduct from that we're creeping up towards those levels, right? The $288,000, we're not there yet at 50K or what are we,
right.
60K? So we're creeping up to that, but the model does not say a specific number at a specific month or day. So it is an average over that period. It's a level. It's what I call the phases, phase transitions from what we were in phase 4. We're going to phase 5. We're now in phase 5. And it's an average over that 4-year period.
So do you think, like you said, a year after the halving, which puts us into this year, this summer, I guess, specifically 1 year, when you say possibly get up to 288 per coin, do you think that could likely happen by later this year and then maybe stagnant for the remaining 2 years?
Yes. Yeah, that's what you can say because it has to be on average 288K. Then we're below that now. So to keep it an average, we have to go up and above that number and then probably fall down. To keep it an average 288K for the 4 years, that shouldn't be in the third year. So we know it should be somewhere end of this year that we're seeing those levels. Otherwise, we can never make that average over the 4-year period.
Yes, that's just, I would say, relatively simple math, but I can't say that I was ever that good in it. Apparently you are. Now, what I will say about the stock to flow model is it has become a darling of those in the macro, from Raoul Pal, who's great, to many others. Many prominent traders, many hedge fund managers are starting to source it now. Banks are quoting you on it. So, kudos, it's really taking off. That could all help. In other words, what you're writing about and the respect that you're getting and the kind of people who are moving potentially massive sums of money, and I mean this respectfully, you're somewhat impacting the market because of the influence that people like that have. Would some people call that greater fool's theory, what they would deem to be the irrational exuberance of the market? Are you potentially fueling, and I'm a Bitcoin owner, so I hope you're correct, that it goes to the higher level of the 288, but is there a little bit of irony or self-serving that because you've really taken off, that you're helping to influence the market and the price?
Yeah, that's a great question. I think that's true to a little extent. Let me say 2 things about it. First, yes, I think what market participants, Raoul, but also the banks like Fidelity or Mellon lately are recognizing is the simplicity of it and the focus on the one thing that everybody sees and I think everybody likes about Bitcoin, and that's the scarcity, the 21 million. So the fact that that is in fact a driver for most of us is very intuitive. And the fact that this model is so simple, also mathematically or statistically, it adds to the trust in it. And regardless of the very technical discussions that you can have about the things we talked about earlier, the serial correlated errors or the co-integration that's there or not, or et cetera, et cetera. So you can have those discussions, but that does not alter the fact that it's a very simple model that everybody recognizes. And of course, the track record of the model helps very much at the moment. But the second thing is, there's one story that I always have in my mind, and that was the Black-Scholes model, the Black-Scholes option model. I'm sure you and your audience know this model. It was invented in 1973. It was an options pricing model by the gentleman Black-Scholes. They got the Nobel Prize for it. But before they got that Nobel Prize, and before the market actually picked up that model, they had like 10 years until the early 80s to exploit that model. Although all the information was in the public, they published their model and everybody could use it. But it takes debate, it takes time, it takes some track record, I guess, for all people to trust it. So with that respect, yes, I think it could have an impact. It certainly does for quantitative or statistically oriented people or investment bankers, especially hedge funds that are very into models, etc. But that's a very small group. So for the entire market or the broader markets to pick up the model, I think the track record is very important, and 2 years might not be enough. So especially when we hit that 288,000, that would, I guess, then it becomes very interesting. Then we'll see if people are actually going to front run the market, because the price target for the next level is 5 million for 2024, 2028. So efficient markets and rational thinking sort of implies that people are going to front run those prices. But we'll see. We'll see what happens.
I mean, since even Tudor Jones came out with his paper this past summer, fellow Greenwich legendary icon and trader, and so many others have been involved, from Mass Mutual to corporations, institutions, I believe the Sovereign Wealth of New Zealand. One that I think went a little under the radar: how important is it, if I read correctly, that Microsoft is building on the Bitcoin blockchain?
Yeah, I think it's very important. But to be honest, I didn't see very much myself about it as well. So I think they still have to come out and show some progress and make it really public. But I know they're busy.
For sure. And I believe 88 trillion is the market cap for all public stocks. Will Bitcoin itself, or crypto as a collective combined, surpass that lofty number of, let's go with 88 trillion? And if so, when?
Yeah, I think it will, actually. If you look at the stock to flow model at its very essence, it is saying that assets with the same stock to flow, the same scarcity levels, should have the same market cap levels. So Bitcoin now is about 1 trillion market cap level. That's way below gold. Gold has 10 trillion market cap. And the stock to flow level of gold is 60 and Bitcoin is 55. So we're getting very close to gold in this 4-year period that we're already 1 year in, or 3/4 year in. We should approach gold's market cap very closely, according to this model. And that will be the $10 trillion mark. And that's also how we get to this very high valuation of Bitcoin. But after the $10 trillion comes the next phase, and that will be real estate. There's only one asset I know, and I'm calling on people who know other asset markets that are bigger than gold and have stock to flow values bigger than 60. Because I don't know them. I only know one, and that is real estate. Real estate has a stock to flow value of about 100. So 100 years of production is there right now. And the entire real estate market is, depending how you look at it, if you take commercial real estate or just residential real estate, and also which parts of the world you take into account, but it's more or less 100 trillion US dollars. And of course, that's also my Twitter name, but that's no coincidence. So I think the next cycle, when the stock to flow of Bitcoin doubles from 55 to 110, it will surpass the stock to flow of real estate. And its market value should, according to the stock to flow model, at least approach that of real estate. And that is 100 trillion US dollars.
Yeah, those market caps are of intrigue to me. I would say in public stocks, like I just mentioned, in real estate and in oil. And actually a little bit related to that, and I know a little bit off topic from Bitcoin, but would love to hear your opinion, is Ether digital oil? As oil reserves in the ground, it's debatable, but maybe worth about 100 trillion. Can Ether do that?
Yeah, that's a difficult question for me. I'm a Bitcoin only guy. And why is that? That's because I really love and admire the invention of Bitcoin that Satoshi Nakamoto, whoever they are, did. And that invention is to combine three techniques that were already there, but never combined in a way for more monetary markets like he did. And that is the elliptic curve encryption. We have that since the 80s. The SHA-256 proof of work algorithm.
Yeah, I'm going to talk about that.
Yeah, and the peer-to-peer network. That was the latest one from BitTorrent. So sure. Satoshi, they combined the three, proven technologies, if you will, into this new monetary invention that is Bitcoin. And everything that Bitcoin has, that I like about Bitcoin, Ethereum has not. It has an inventor that's still around. He's a single point of failure in that respect. Mm-hmm. It's not peer-to-peer because Infura runs all the node information, the blockchain information. Everybody is looking at Infura. Of course, you can run a node, but it's not optimized like for people to run their own nodes. You need a big computer. You need great bandwidth. It's not a feasible thing to do. So in practice, everybody looks at this one big data center of Infura. So that's absolutely not peer-to-peer. So and then the proof of work, the mining, of course, that's a big argument in the climate change, etc. But Ethereum has gone to proof of stake. Well, that's the one thing that proof of work was invented for, to be not proof of stake, because we already have proof of stake. So the biggest owners decide how much and what will happen. That's the same in the fiat world. So very difficult question for me to ask because I'm a very, very much a Bitcoin only guy. And Ethereum just doesn't have that attraction to me in many respects that Bitcoin has.
Bitcoin has dropped 90% before. Will this happen again? When and at what price? Will it drop at the next cycle when it's maybe a million by 90%? Of course, this is a crystal ball question. But again, if we look back, it has happened before.
Yes, I think it will happen again.
Wow.
I know there's much debate about that. There's people that say we'll never do that again because now the institutions are in. Now we have a $1 trillion market cap. Now it's too big. It's like Amazon that had some volatility in the beginning, but once it got bigger and bigger, the volatility was gone. And that is logical. And maybe that will happen in the far future. So say 10 years from now. But I certainly think, and that was your question, that we'll see one crash again after next all-time high. So I would say if we do anything similar to last cycle and the cycle before that, then we'll see an all-time high somewhere at the end of this year and a low of a minus 80%, for example, in the year after. So in 2022. Yeah, and I think the reason that happens is
and the naysayers will come back out, including my friend Peter Schiff. We live in the same town.
Yeah. Well, probably gold is then very much up. Yeah, I don't know. But it's feeding greed and fear as well, right? People will FOMO in when Apple, for example, publishes that they are going into Bitcoin. Or when Microsoft says we're doing this big thing. People will, and institutions too, because there are also people, they will FOMO in and make a next all-time high. And then something will happen, a black swan event, a government threatening to ban Bitcoin, a company threatening to release a quantum computer or something like that. And people will be scared and they will sell. So I think that will happen one more time. But there will be a time when Bitcoin will be too big to fail, if you will. And I guess that moment, if you ask me, and like you said, it's crystal ball speaking here, for me, that would be the moment that Bitcoin will be as scarce as real estate and approaching this 100 trillion US dollar value somewhere in the 2024, 2028 period.
And with all due respect, you are giving yourself a bit of a pretty big cushion there if it hits a high of later this year between 100,000 a coin and 288. If you had to lean more to one or the other, the lower end at 100,000, the higher end at 288, which one would you guesstimate is more likely?
Yeah, let me say two things about that. So there's two models currently running, right? It's the Bitcoin only time series models, and those models have an average of 100,000 US dollars. But I am more into the second and latest model, the stock to flow cross asset model, with also the data from gold and real estate in there, and that's the 288K number. That is my favorite. I agree, it's a pretty wide band, but I'd rather be roughly right than exactly wrong. So
no, that's understood. If I could do a little magic and I could make the Satoshi person or persons, let's call it a person, available to you to ask one question, what would be the one question you would ask Satoshi?
Oh, that is a very difficult question. I would ask them about the halving. Why 4 years? Why not continuously? Because you could decide to do it every year or every day. So and approach that 21 million coins supply cap with a continuous supply schedule instead of a shockwise 4-year cycle. So I expect that Satoshi did that to introduce nonlinearity, to introduce FOMO and fear, to make sure that people that sounds weird, but that don't belong here, that are weak hands, that are not like strong holders of the Bitcoin, that don't share the vision, that they go out and give their coins, sell their coins to strongholders that share the vision, and also to, in that way, make place for people that, have learned about Bitcoin later, but want to enter, so, to give them an opportunity to enter and to take a share of that land. That's what my guess is, but I would love to ask that question. Why the 4-year period and not continuous?
I mean, my next question is going to be, what would cause you to change your mind about Bitcoin? Being that you've been in finance a long time, you believe in stock to flow models, so some of the metrics you're using, how that could change. And I guess an obvious one, if the major governments were to band together and ban Bitcoin, electricity goes out, it loses hash power. So those are two obvious. Is there anything that maybe my audience wouldn't expect that would cause you to temper or limit your expectations for Bitcoin, or those would kind of be the big one or two?
Yeah, so the big two, like you say, and it does come from all the polls that we do. Government banning is the number one risk that people see, and quantum computing is the number two. So regardless of those two, I think Bitcoin is made to always go up. That's why they call it number go up technology, because the supply is capped much more than of gold, for example, or real estate. It cannot be changed. It's in the protocol. It cannot be changed. Again, it will be like playing chess and changing the rules of chess. You can do it, but nobody will play with you, and therefore it cannot be changed. But if somehow somebody is able to change those rules, it could be through human intelligence, some government, some companies cooperating to destroy Bitcoin. If they change that rule, that would really, really make me very uneasy as I would be about buying Ethereum right now.
Of course. And we're going to get to some of those risks a little later. I'm going to try to phrase my next question. I don't know if I could do it properly. We'll give it a shot. What would cause you to change your mind? I guess that's a common theme of me today about stock to flow, other than crossing the $100 trillion market cap. What I mean by that is some of the metrics that you're using on gold, on, you mentioned you may not be as sure on public stocks or oil, but approximately 100 trillion for real estate. What would happen when it surpasses that in, 4 to 6 years? You're going to have to adapt your stock to flow model because there's kind of nothing to compare it to.
Yeah, I guess then it's gone. Then if that happens, the model is just breaks down. And also, for example, if the market cap of gold will surpass that of real estate, while its stock to flow is lower than real estate. That would be really odd. That would not be possible in this model. Or silver, if they're going to play funny games with silver, and silver will be much more worth than gold, despite its lower stock to flow, that would turn things upside down. And the same for Bitcoin. Bitcoin has this, I talked about this linear pattern in lock space. If that linear pattern, that linear growth path of Bitcoin would be off, would bend down, would go sideways even, I would really be highly skeptical of the stock to flow model holding true. In fact, then it probably breaks down.
Excellent. And I know we are getting a fair amount of questions in. Eventually, I'm going to do my best. I can't guarantee to get to them, talking to our live audience now. I have a lot of questions. Some of them are going to be weaved into what you're asking, and partially depending on Plan B's time, I do tend to do longer form interviews. So in a perfect world, we will get to everything. Just be patient. The next question I know makes the maximalist uncomfortable, and we talked a little bit about it via email back and forth, but why don't I just throw it out there? What is the significance of the Bitcoin block reward in the Genesis block? In other words, can it be moved, that 50 Bitcoin in the Genesis block? And if so, would that destroy Bitcoin?
I know it cannot be moved. Within the current protocol, it cannot be moved. But why that is, I don't know, to be honest. I don't know why it cannot be moved. It has to be something about kickstarting a blockchain from the beginning, right? The first block has to be, it doesn't have any earlier block, any earlier Merkle root to and a hash to lag onto. But yeah, I think that must be the reason. But I'm not sure. And I'm also not sure if that would kill Bitcoin. It cannot be spent. So you will have to change the protocol to make it spendable. I think somebody did write some code to make that possible in the past, but of course it has to be merged into the code and accepted by everyone who runs and plays Bitcoin, if you will, which most certainly will not be the case. So I think it's a very hypothetical thing that will never happen in practice. In fact, I think the protocol that we're running right now, the level 1 protocol, the Bitcoin protocol, is as good as almost ossified, almost ready and not to be changed anymore, because any change would probably improve it a little bit, but it would also introduce great risks of changing things that should not be changed. So we're very, very close to ossifying the level 1 protocol and bringing all the attention to the level 2 and next level of this protocol stack.
We hinted at it, and we'll get a little bit more to government engagement and involvement and risk in a little while, but related to that, and I'm going to build this up a little bit, the more this grows and gets widespread adoption, and I'm talking more in the US, the less likely I would think the government is going to ban it. Actually, I think they would want to benefit, AKA tax it. One, it's employing more and more people all the time. People that are often white collar, making higher income. Look at some of the companies in the US, Coinbase going public. Look at US senators like Senator Loomis in Wyoming being a big advocate. Look at that. It's on the CME. It's getting state approval in banking. It's progressing and employing people that are influential and vote. So I do think it's probably not quite there yet, but it's getting closer and closer where governments looking to collude is going to get harder. We're going to do a little bit of a deeper dive to that shortly. But now my question, and here's what I think is going to happen. Will governments benefit? Of course, they're going to look to benefit by taxing Bitcoin. And the maximalists are going to cringe on this one. I just think it's going to be a reality annually, similarly as property. So imagine owning real estate and you owe property taxes every year. Do you think something is coming? I do. And I guess we'll have no choice but to accept it, depending on the country where we live in, that countries like the US are going to tax it as property.
I do. In fact, in the Netherlands, where I live, they already do it. So we do not have capital gains tax. All the capital gains is untaxed. But we have a wealth tax of about 2% on everything you own, from houses to stocks to Bitcoin. So that is very harsh for people with a lot of Bitcoin. But on the other hand, while Bitcoin keeps increasing at the levels it's increasing at the moment, the 2% is far less harsh than the capital gains tax, I guess. Although, of course, you can, with the right lawyers, circumvent both the capital gains tax and the wealth tax. So there's also that. But yeah, I think it would be a very logical thing to do. Although I see a trend in the other direction as well. So, for example, the Netherlands would like to go towards capital gains tax, but that would be very much work for the IT systems, the admin, the controlling, and also for the citizens that get taxed. It will be a very messy process. Capital gains tax is a lot of work, as you probably know in America, where you have to keep track of all your buys and sales of Bitcoin. And so wealth tax is quite easy to implement. I would advise governments to do that even.
Yeah, and I'm going to get to a little bit later, and I think they're interrelated, but FinCEN hiring the former CTO of Chainalysis, I do think that's going to be pretty significant. We'll likely have enough time to jump into that a little bit later. Someone noted, Angelo, stop talking about the biggest risk of no electricity or governments to Bitcoin. The biggest risk, and they meant this tongue in cheek, but actually there's truth to it, is the biggest risk is not owning any Bitcoin. And if you look at if 1% of your portfolio was in Bitcoin in the last 10 years, it would have been amazing. And that's no guarantee it's going to have that level of exponential growth in the next 10 years. I'm assuming since it's been so exponential, probably not. But that comment actually had more than a grain of truth to it. So, let's get to the question that's been building up a little bit in terms of the biggest threat. I suppose it would be the US, again, for the reasons I noted a couple of minutes ago. An outright ban at the moment appears incredibly unlikely, arguably unconstitutional, but nonetheless, they might be able to do horrific things with taxation and other things that would make it kind of doing that. But, and by the way, the industry would move to countries that would be very friendly to that community, that want those kind of people to come in. I don't know, Canada, Mexico, etc. However, if a multiple of countries led by the US, even their rival China. So now you have the US, India, China, the UK, Mexico, like the 15 of the top countries all collude together and do that, that would be a big problem.
It would. But like you said, I see no legal basis why they could do that. They cannot ban code, what is basically free speech. They cannot ban private money like gold, because they also should ban gold then. They cannot ban unhosted wallets, like they call them, because, you have to ban safes for gold as well. And regardless of that, all the trend, like you said, all the trends are towards taxing Bitcoin, towards regulating Bitcoin, towards people are allowed to have Bitcoin, but just report it on their tax statements. And there's regulation from the CFTC, from all the government institutions. So it wouldn't be like that. And frankly, it cannot be banned. And it would be, maybe they're going to do it. You see it with all the inventions, right? When the car was invented, that was also almost banned. You couldn't drive faster than 30 miles. You had to employ a driver and a guy with a red flag in front of it that walked in front of the car. And all those silly laws and basically practically...
We laugh at them now. You're right.
Yeah. Years later, at the time, it must have been like a real pain in the ass for the car makers. But they probably come up with that. But the smarter governments will cooperate and they will...
they will benefit from it.
They will benefit. Yeah, of course. Like America did with Silicon Valley, they will make a crypto valley. And I think Miami, Texas and Wyoming are already taking the first steps towards that. And you see it all over the world. Panama, same thing. Switzerland, Singapore. So we get those places that have, how should I say that? Intelligent governments that will recognize the invention that Bitcoin made for what it is and recognize the potential for profiting and benefiting from that as a country, and not drive away all the brains and the capital from that country to other countries, because that would be very
of course
harmful.
Not. And again, governments want to tax. They want to confiscate is a word I use. Maybe it's a little strong, but you get the idea. So they're going to benefit from it. And the more that millennials and inevitably the Gen Z, two truly big in terms of population generations who are much more fluid in technology, more accepting of Bitcoin, distrustful of often big government and big corporations, the more they come into a position of authority, power, money, and political power, then they're likely to be more accommodating to it than some of the older folk that are in position of authority now where they're scratching their head, not getting this. I suppose a question I would have, I think you did kind of answer it via market cap. It'll probably be in the next halving cycle. But when does your stock to flow show that Bitcoin will equal gold's market cap?
Yeah, it's this cycle actually. So we're 55 and gold is about 60, but that's close enough, I would say, because next cycle it will go to 110, far beyond gold. So actually, it's this next couple of years that it should approach also the market value of gold, so the 10 trillion number.
I mean, I don't want to get caught up on economics. That's some of the things I did with Michael Saylor when he was on, although it was a lot of fun, but I have, many more Bitcoin and other type questions specific to you. But explain in your words, relatively briefly, how the dollar has significantly lost its purchasing power, honestly, decade after decade after decade.
Yeah, and the same is true for euro and the yen.
Worse, yeah, worse.
And all the other in the world. But yeah, US dollar being the reserve currency. I think what the central banks are doing is very obvious and transparent. They are aiming at a 2% inflation level every year. And that is, in their eyes, and most economics books' eyes, a good thing, because money that decreases in value will be spent. The money that increases in value will be hoarded, and that's not a good property for money. So they're striving a 2% inflation rate, and they have to debase or increase the money supply to achieve that. And inflation, money supply, it's one of the mandates, and they're doing that. And it has worked for us so far. And yes, the end result is, of course, that your dinner and your other costs will increase in real costs. But that's one of the things I think that's important in capitalism. You have to have capital that increases with more than that 2% number, because otherwise you will be going backwards and you cannot catch up. So in that way, the system works as advertised. The 2% makes sure that people that do not have capital, that have to work for their income, keep working, which is of course good for a company, for a country, because you need working people. But the people with the capital, they benefit from it because the capital, of course, increases faster than the 2% the central banks are aiming for. So it's no magic. It's just the dollar, the euro, the yen, and the central banks, they're doing what they say they're doing. It's very transparent. And Bitcoin is just an asset, maybe more than a currency that is scarce and not inflated 2% a year. And by the way, and I think that was part of your question, the amount of inflation or debasement or money printing, if you will, that we're seeing since 2008, the banking crisis, but especially since last year, the COVID crisis, has been staggering, of course. It's been, way beyond historical measures, the trillions and trillions that are printed to save the banks and now to save all the companies and the country. Basically, what the secondary effects of that money printing will be will have to be seen in the real economy. But part of it you're seeing at the moment is it's rising asset prices, stock prices, real estate prices, and yes, Bitcoin prices.
Oh, for sure. I mean, I agree and amplify that. Listen, the audience, to my interview with Michael Saylor that talks about, at least for those with assets and have wealth, their true inflation may be much higher, much, much higher than 2%. Buying homes in Tokyo, London, the Hamptons, Malibu, New York, owning sports teams, just even the S&P 500 in the stock market. To keep pace, you may have to actually, he goes like 20, 25%. Even if I'm conservative for that audience, I may say 10 or 15%. it gets complicated, but I basically agree with what much of Michael said about that, which most people disagree with me. When I have economists on, they laugh at it and chuckle, but I still like to nudge them and ask that question. Question for you. What is the best argument to be a Bitcoin maximalist?
I have to think about that. I think if you really understand what Bitcoin is, if you really understand the invention that is described in the white paper, and if you advise from me, if you do not have read the white paper yet, it's a 9-page document. It's very readable. You should read that. That should be the first thing you read.
Absolutely.
And everything that's in that paper, you should understand. If there's something you do not understand, ask about it. Make sure you understand it because it's brilliantly written. It's in a simple and yet very consistent way. So in that paper, it mentions the 3 technologies, and I already mentioned them. It's elliptic curve encryption, it's the SHA-256 hash that's used for the proof of work, and it's the peer-to-peer network. If you understand and truly understand those 3 technologies and what makes the combination of that great and into Bitcoin actually, then, well, everything that is not proof of work, everything that is not really peer-to-peer and decentralized, and everything that does have a CEO, a boss, an inventor still walking around as a single point of failure that can be, co-opted, if you will. Everything that has that is then worth less and not desirable because Bitcoin is so perfect in those dimensions.
Are Bitcoin maximalist and Bitcoin absolutist the same thing?
That's semantics, I think. Bitcoin maximalist was something that Vitalik Buterin invented, the term. He used it as a bad word for Bitcoin only people. But Bitcoin maximalists are just in love with Bitcoin and all that it stands for. So why it was made, against debasement, and the absolute beauty of its invention. And all the copies of Bitcoin, no matter how great the narrative, and there are some really great narratives around there, I know that. For example, Ethereum. Yeah, if you really like the Bitcoin narrative, it's just another thing. It's maybe I should say that. So altcoins, maybe some of the altcoins are just there and will succeed, but it's another thing than Bitcoin. And maybe another thing that turns away or turns off Bitcoin only people is that 99%, and that's literally 99% of the 5,000 altcoins are pure scams. So it's very risky business. So maybe 1% is very good. So the top 10, top 20, maybe they're good. But there's so much scam projects out there and coins that have been already killed. It's like something I wouldn't touch. I wouldn't dare to risk it. But that's just me, right? It's indeed a Bitcoin-only view of that part of the world.
We don't want to necessarily get into Bitcoin 101 and the issue of how to purchase and storage and hardware and custody, but I do think I have to ask one question relative to that, and that relates to what some people find to be the complexity of custody issues, especially those that are not overly technically fluid, a little older, whatever it might be. So I suppose the maximalist or the hardcore community would say, no keys, no Bitcoin. So they don't look at it as, let me give it to a significant custodian the way that we traditionally do whatever, digital stock certificates, etc. They're probably not going to be advocates of inevitably the ETF or even some other platforms. They're going to want to own it and they're going to want to store it themselves. Would you say there's a right or wrong way?
No, I am into the not your keys, not your coins school. So I really like to hold my own keys because that means you do not have counterparty risk. So there's no credit risk. It introduces some other risks, operational risks, that you do something wrong and you lose your keys, for example.
That would be bad.
And that would be very bad. but at least you have this bearer instrument and it is possible that you own your own keys. It's not like fiat money that's or a bond that's always a debt. It's equity-based. It's an equity-based asset like gold and a bearer instrument. If you have it, you have it. But I guess if you're a large investor, and especially if you're a first-time investor in Bitcoin, it is very well possible, especially nowadays with custodian services of the big names, for example, Fidelity, to own your Bitcoins in one of those custodian services and have them insured as well. That would be a very nice way, or even on an exchange like Coinbase, for example, the big one. I would not advise it, but I mean, Michael Saylor himself bought his Bitcoins from Coinbase. So that is a very logical and good first step, I guess. And the further you go, the further you go down the rabbit hole of Bitcoin. And that is when you are going into self-custody and want to own the things and the keys yourself.
Yeah, no, those are great comments. And it's not just Fidelity as a major name and brand that's involved in custody. NYDIG is a wonderful organization.
Yeah.
Well, and I think it's inevitable. You're going to see the Goldmans, the JP Morgans, who already have digital asset divisions, begin probably sometime this year to roll out services for that as well. Plan B, is Satoshi returning a threat, a risk to Bitcoin?
Yes, it would be. Yes.
Why?
Well, yeah, I think that's one of the things about Bitcoin. If you understand why Satoshi went away, why he was anonymous, and please note that I'm anonymous as well. Not that I'm Satoshi, I'm not Satoshi, but being anonymous is, especially for Satoshi, a very important aspect of making Bitcoin a success. Because if Satoshi would be alive right now, I am quite sure that the FBI, the CIA, the SEC, the CFTC would already have him somewhere in a room and make sure that he would be in front of a camera saying that Bitcoin will eventually be a failure, that he has sold all his coins, and et cetera, et cetera. They will co-opt him, and you should never, ever have a single point of failure in a financial protocol like Bitcoin. So not a CEO, not a company, not an address, nothing that it should be really, really decentralized, especially its inventor. And if you look at Bitcoin wasn't the first digital currency, right? There were like 6 predecessors, Hashcash, et cetera, et cetera. All those projects failed. Why? Because they were not peer-to-peer, because the CIA arrested the inventors and put them into jail and confiscated the server that they run their networks on. So it's, if you have one big data center or one very influential inventor, that would be too easy for a government to kill. No, he will never, ever come back. And even if I wouldn't know who Satoshi is, I would never, ever say it. I would keep that a secret.
Well, we have some of that coming up, but a question, it's going to be a comment, but I want you to help me phrase it as a question, kind of in the world of economics, but relates to all of this. Measured in gold, that's the key point here. Measured in gold, the S&P has really not moved much in, my God, like the last 50 years. So the stock market versus other asset classes, gold, oil, I mean, stocks, because the value of the dollar is going down. And this is a further argument for Bitcoin, that if you have a diverse series of stocks, you have a lot of losers in there. Now, if you had Amazon and some of the FANG and Tesla the last year or 5 or 10 years, I guess you've done pretty well. But if you look at things measured in gold, in my example, versus the S&P, my God, the stocks actually really haven't done that well.
Yeah, that's true. And especially since quantitative easing has been going on since 2008. So everything that is scarce, stocks, real estate, Bitcoin, everything goes up. The funny thing is, if you look at Bitcoin denominated in gold, that goes up a lot. In fact, the stock to flow relationship, if you will, so the proportionality between delta, a change in stock to flow versus a change in value of Bitcoin in terms of gold, is proportional as well. And we're now at about 35 ounces of gold for 1 Bitcoin, but yet that used to be like 6 ounces of gold not even 2 years ago, or 1 ounce of gold in 2016. So it goes up rapidly and exponentially, Bitcoin versus gold. And I think that's the better way of measuring Bitcoin, by the way, and measuring maybe other assets as well, like real estate and stock S&P, because it takes the dollar out of the equation. And with that, it takes quantitative easing and all the madness of money printing out of the equation and gives you a much, much more transparent, much more signal, if you will, better look at the real price of an asset.
I mean, I brought this up earlier, but I want to maybe we'll dive a little deeper and get your opinion. FinCEN has hired the former CTO for chain analysis. And broadly, what is the significance of this? So people doing bad things, so-called money laundering with Bitcoin because of the blockchain and the record has probably always been a bad idea. Use dollars, use actual cash if you're a quote unquote a bad guy. But I suppose this also preps the government for, I mean, honestly, probably knowing a little bit, at least the big players, who owns what, for when they eventually come, as I think, with a property tax like real estate. At least for US citizens, it's going to be hard to avoid that. There may be some tax mitigation strategies. We won't bore our audience with things like private placement, life insurance, and stuff like that. That may be applicable for these assets. I don't know. But if I had to broadly ask you, FinCEN hiring that person via from chain analysis, to you, what is the significance of that?
Yeah, I think it's a smart move, and I think it's a logical move as well. I would do the same. To be honest, the government is hiring capabilities in the Bitcoin space, also the analytics, on-chain analytics, but that's also available for investors. So companies like Glassnode or Coinmetrics and others do it in-house like I do. I do chain analytics myself. You want to know who is moving coins, where the coins go to, and it's very transparent. I mean, like you said, you must be a very stupid money launderer or terrorist if you use the blockchain, because everything is on there. And once you go to the on-ramps or off-ramps and exchange it to fiat, of course, there will be trails, money trails, and you will be hunted down, as are all the money launderers and terrorists in Bitcoin at the moment. But yeah, it's unbelievable how much information is there on the blockchain. You can see miner coins, you can recognize exchanges, you can see whales, you can see everything. And the information you get from that is really insightful. And to me, it's an extra view on the Bitcoin space, the Bitcoin price, that I use next to stock-to-flow model. So the stock-to-flow model, as we talked about, is very rough with very high bandwidths, and it gives a rough estimate in the future. But with on-chain analysis, you can sort of triangulate that forecast. So you can recognize, are we still in a bull market or not? Are certain transactions still going on, or even increasing or decreasing? So I think it's a very wise move of the government to hire those capabilities.
Yes. And, people must realize the government, unfortunately, kind of is the ultimate power. Look at the US. They have unlimited capital. They could hire the smartest people out of MIT and pay them way more than they would get anywhere else if they wanted. They could subcontract. They could hide how they do things. We had Adam Robinson, who's amazing, on back in early January that mentioned, what the US government has in terms of advanced computing and AI is like well ahead of DeepMind at Google. I don't know whether that was true or not. But to think that the government is not a little bit all aware, especially here in the US, I think you're kidding yourself. I think they want to benefit and profit from this. So that's a little bit of my nefarious kind of how I think where things are headed. You probably know this next question's coming. It came to Saylor, it came to others, but you look at, speaking of the government, speaking of SHA 256 that you noted, I think it's a fair question for me to ask you. Did the US government, specifically the NSA, or some person or persons the NSA subcontracted out to, did the US government create Bitcoin?
I don't think they did. But having said that, there is a very nice paper of the NSA describing Bitcoin for 80% accurate. And I think that was a 1995 paper. So, and of course,
yes,
the government has encryption, cryptographers, and mathematicians and computer science people employed. So those people are probably connected to the cypherpunks and all the forums that Satoshi and his friends are also on. So they all know each other for sure. It's a very small niche group of people. So yeah, they must have known each other, but I don't think the NSA made it. What I miss in the NSA paper, because they're talking about encryption. They're talking about the SHA-256 is, of course, an NSA-based algorithm. But what they're not talking about is the peer-to-peer thing. That Satoshi Group, they borrowed that from BitTorrent and Napster and Kazaa and all that.
Sure.
Peer-to-peer stuff. And that is what makes it uncontrollable for a company or a government. And yeah, I don't think something like that would ever come from an NSA or a government body.
I'm going to ask you a question and then a follow-up that's going to be probably a little uncomfortable for both of us, and it relates to what we're talking about now. Even if they didn't create it, again, unlimited resources, an early head start with SHA-256, knowing how to go on the portals and things where the cyberpunks are talking, do you kind of think that effectively the government, the NSA, knows the people that were involved in the early creation of Bitcoin? And I am going to mention a name. It's going to make all of us feel a little uncomfortable. Do you think the lead figure in that was Hal Finney?
Yeah, I think Hal Finney definitely was, well, it's a fact that he was very close to Satoshi, if not part of the Satoshi Group. Because,
right.
Of course, the first transaction ever recorded on the blockchain was made to Hal Finney. I think it was in block 170 or 171. And if I were Satoshi, I would make the first transaction to myself just to see if it worked. But regardless if he was Satoshi or he was obviously close to Satoshi, and probably it was quite a big group, because all of the three techniques were quite complex and had to be integrated. Well, that's a major accomplishment. It could be done by one person, but who knows? So yeah, Hal Finney would of course be a perfect candidate because he died a couple of years ago, which would make him, well, untouchable for governments. But yeah, broader answer to your question, I think everybody who follows the white paper, the references in the white paper, the crypto projects before Bitcoin, there were 6 of them, and the cypherpunks, which was a very small group, everybody who studies those people a little bit has a short list of people who could have been Satoshi or could have together formed a group that was called Satoshi.
For sure. And yes, Hal Finney did die, I believe 2014 or 15, of complications from ALS. And yes, there are conspiracy theorists, I'm not saying I'm one of them, that was interesting, let's put it that way, how that evolved. Do your own research, make your own decision, and maybe you're a conspiracy theorist and like to feel that way. Let me ask one more question related to that, and that's going to be the fake name as well of Nicholas von Saberhagen, the quote-unquote founder of Monero. There are certain traits of Monero relative to Bitcoin, some similarities, and again, the belief that Hal Finney may have been Nicholas van Saberhagen. Have you researched that, given any thought to it? And is there a unique tie-in between the two?
No, I unfortunately do not know anything about that, but I'm sure I will read up on it.
Yes, it makes interesting reading. And again, maybe more conspiracy theory, but feel free to. Ironically, in your backyard is going to be my next question. I recently heard in the Dutch news that a university in Netherlands has developed a prototype quantum computing. I was wondering your view on this and the relationship to Bitcoin's future and security.
Yeah, I follow quantum computing quite closely, of course. So I talk to people who invest or have companies that develop quantum computers. And I talk, of course, to cryptographers. Well, for example, Adam Beck is quite knowledgeable about also quantum computing, but of course, cryptography. So you hear 2 different stories. I think the owners of the companies that make those computers are very optimistic that it could be happening somewhere in the next 5 years. I think the cryptographers are less optimistic. So they're talking 10 to 20 years. If you look at government documents, it's also 10 to 20 years. But even if it is possible, because you have to stabilize the qubits and it has to be cooled and et cetera, we're far from that. But even if we eventually succeed in doing that, I think the improvement in computing power is in the order of magnitude 1,000 or 10,000, which is not nearly close enough to break the private and public key connection. So I don't see it as a real risk, but we have to follow it closely. And if it ever comes close to finishing a computer that does quantum computing, then of course we could improve the protocol a little bit, strengthen it a little bit.
Mm-hmm.
But yeah, one of the things that we have to look at is Satoshi's coins, of course, because those are the most vulnerable, that are not double hashed and double encrypted. So they have their private or their public keys out there available for the quantum computing to hack, and normal addresses don't have that. So yeah, those coins, the first, say, million coins, are the most vulnerable.
Yes. And that relates a little bit to what I mentioned earlier, perhaps even the 50 Genesis block, but let's be positive. And again, there's many more things that quantum computing could do damages to. My God, probably nuclear codes, banks, and institutions that are going to be way easier pickings than the complexity of Bitcoin and crypto. And there are some things in Bitcoin, specifically Bitcoin compared to other cryptos, that could be done to help counteract the potential negative impact of quantum. So it's something to monitor and stay on top of. Plan B, what are you working on now that's unique? Any major things that maybe you haven't spoken about or published yet that our audience can learn about?
Yeah, as probably some of your audience know, I quit my job March 1. I was an institutional investor. I'm now taking a rest first, taking a look at all the opportunities that have come by since I published the article, because things have been really crazy for me the last 2 years. I went from 100 followers to 350,000 followers on Twitter. It's like a day job. It really is a day job. So I couldn't combine it. People are asking for more information, which I understand because Twitter is very limited. So, for example, a newsletter would be a thing that I could do. On the other hand, that's a lot of work, of course. Setting up a fund is a much requested feature. Mm-hmm. I do manage a private pool of money, and actually maybe inclined to keep it that way because, well, managing public money, I did that for 24 years, and it's a lot of work talking to regulators, clients, et cetera, et cetera. So the whole family office concept of managing private money is of course, makes you very agile, makes you the first one to recognize and act on new information. So I like that. Well, and one area I really do a lot of work in at the moment is this on-chain analysis. Looking at it's a new area. So I have a small group of quants around me, and we hack that thing day and night to recognize patterns, to make algorithms, to make trading bots. And it's unbelievable what you can do with that, especially if you combine it with derivative markets, so the Bitcoin future markets, with cash and carry strategies, and the option markets with covered call writing strategies, and all the arbitrage that's still in there because it's a maturing market. It's like no man's land at the moment. It's beautiful.
Very interesting. Would probably love to have you back on to talk more about that. I find that intriguing as well. A bit of a personal question, and simply none of our business is a very fine answer, so I'm never offended. Approximately what percentage of your personal net worth is in Bitcoin?
Yeah. It's irresponsibly long, of course, like we say.
I would expect nothing less.
It's funny, you always start responsibly with, 1%, 5%.
And then it grows so much, it takes a larger allocation.
Right. I've been quite open about when I entered the space. So I read the white paper in 2013, wasn't ready to invest then, but invested in 2015 and 16. So that's a $400, $500 Bitcoin. So that went up by 100, 150x at the moment. So, yeah.
Is it noticeably above 50% of your portfolio?
For sure.
Okay.
Yeah.
So, and I'm going to go to the audience